Are we about to witness one of the biggest mistakes that's ever happened on Wall Street? As we turn to all-time highs, there's something that's just been announced that will absolutely blow your mind. In today's video, we need to talk about that along with the squeezes that we continue to see happening in the most important sectors. And will Trump fire Powell? It looks like that is now the big discussion, and it's sending yields crashing around the world. Guys, so much to get into, including one very important market. And today, yes, that's right, it's actually crypto, and it has something to do with real estate. Let's go into it right now together. This one is not to be missed. Well, guys, this could be one of the biggest sessions that I've ever seen when it comes to announcements. My name is Tom, and today's video will be discussing the macro, the data, and of course the key flows. But let's kick things off with more than just the Nvidia and Tesla moves. Let's talk about the big one, which is the US Federal Housing FHFA board. And basically, it looks like here there is an order issuing directive to consider cryptocurrencies as an asset in risk assessments. Yes, that's right. We will now be seeing the potential here of buying property using your bags in crypto and not having to sell them any longer. And what could possibly go wrong with this announcement? Of course, crypto looks to be set to maybe even move up on these types of announcements. And this is, of course, a very big deal in terms of legalizing, especially Bitcoin, Ethereum, and some of the other big coins. But of course, with the risk of the asset, that is the volatility in the asset, could this be a disaster waiting to happen? Super interested to see your comments down below. Massive announcement here, and certainly one we will be continuing to watch throughout 2025 into 2026. Make sure to subscribe and smash that bell icon as well, because we'll be covering this as much as we can. Now, why is this coupling with a few other things? Well, as you may have seen, the dollar just slipped down, and it looks like Trump is potentially considering early removal of Jerome Powell. And of course, this means the possibility of tons of rate cuts. We already know that Trump wants around 6 to 8 rate cuts in total. And of course, in terms of what could be happening here, we may get somebody that's maybe a little bit more on the dovish side. And this could mean, of course, a whole bunch of downward pressure on the US 2-year yields and the closer yields in terms of the markets. Will we end up causing a reinflation though? This is the question. We actually have a chart that is tracking the 1970s that you might have seen as the thumbnail for today. And boy, oh boy, is it getting incredibly close. But before we get into that one, let's talk about the NASDAQ and how it's rallied. So we've seen the NASDAQ move through, all sorts of sell-offs over the years in this channel. Since 2020, we've seen quite a few big bear market sells, and we've just had one of the fastest ever recoveries. I think it's the third fastest ever recorded. And this means that we've now gone from a negative 20% to, of course, a 1-year high within 3 months. That's pretty incredible. These are the other previous times, and these are the stats of what happens next. And you might notice here from Subu Trade that 3 months later, 6 months later, even 9 months later, and even 12 months later, the market is generally incredibly bullish. And this is leading to quite a lot of speculation from the street, and also a lot of people missing out. In our previous video, we talked about hedge fund managers and institutions being super far behind, and that retail was actually pushing higher on buying more, and that institutions were really lagging in terms of being in this rally. Now, that does mean that dips might be more shallow. They may be only 3, 4, 5, 6, 7% for the time being. And it also is seen that institutional clients have been going ballistic. As of last week, net buying in tech ranked number 1 in data history since 2008. So that is the fastest buying ever recorded by institutions in literally just a week. That is an incredible statistic. On top of this, we know that hedge funds are completely underweight the US right now. And although they've been doing well in things like the Eurozone, emerging markets, different types of cash strategies and all sorts of things with metals, you can see here that if the US does continue to improve, thanks mostly to, by the way, AI, because AI is the big growth engine here, and we're actually seeing that actually form a portion of GDP growth, that they may be literally caught not having the bags and therefore having to continuously buy in. And we do know that when technology is leading the US market, it usually means bullish action is set to continue. We've had this chart on the videos now for weeks and weeks and weeks. And do remember that innovation is what makes the US market the strongest. And at this stage, 87% of the time, tech companies outperform the rest of the market since 1932. Yeah, you heard that right. Since 1932, 87% outperformance. So when tech's leading and semiconductors are breaking out and those types of things are occurring, it means that even if we do get dips, you have to consider them being purchased. And we've talked about this a lot, especially since that whole tariff kind of war has now simmered down a little bit and it looks set to stay at around 10%. Another question I'm getting asked from a lot of people is that do you expect tariffs to come back? Well, we expect them to sit at 10%. We expect everything to kind of just roll over in terms of these 90 days that are expiring soon. But that is coming up and we will have a special video on that to discuss it together. Now, what else is starting to get maybe a little bit more worrying when it comes to charts? Well, of course, with crypto now being potentially a new asset class to borrow houses against, we're now starting to see some other things occurring. And that is that low quality baskets similar to 2021 are showing significant outperformance. And we've really brought this up on the channel over the last couple of weeks, particularly the last maybe month and a half, where we saw ARK-K break out and start to find extreme strength. And that's similar to what happened at the back end of 2020, 2021, where we saw a massive outperformance in meme stocks and, of course, non-profitable tech baskets. And you can see here that meme stocks are the number one at the moment in terms of just so much recovery, so much strength in them. Although some stocks, not meme stocks, but some stocks like IPOs, it's like Circle, have started to sell off. But in general, non-profitable tech baskets, they've also been doing very, very nicely recently when you compare it to the S&P 500 index. And what this is telling us is that people are in euphoria and no one considers that there is a risk anymore in these markets. Now, there's always a good saying that markets can never sell properly until everybody's involved. And one of the things I am looking for on the channel, and I'm sure we all are, is that we're looking for when everybody is involved in the markets. And you might say, well, everyone's in. Well, we do know that hedge funds aren't, and we also know that institutions are super far behind. So technically not everybody's in, but certainly speculation, options flow, and large transactions are starting to come through here, with some people choosing to close their positions. The reason we do know that someone's closing is VOO continues to get large transactions through these peaks. Now, we saw this in the most recent kind of what we call pit or pullback in time. Quite a lot of large transactions, the fifth largest, the fourth largest. Now we've seen the third largest and the second largest of all time. So basically what this is telling us is that we have huge amounts of transactions here at the highs, and probably somebody is saying, you know what, I'm going to take some profit off the table, and that was an exceptionally good run. And the reason they're probably doing that is they know their stats when it comes to 2025, and after having 2 years of significant outperformance, you often see what we call a choppy market, which basically is what we've had so far. Start off, chop, down, up, sell off, chop, chop, chop. That's the way that generally you expect the third year after 2 20-plus year returns. And the reasons are quite simple. We need a profit boom. So if we don't get the Fed cut, if we don't get several Fed cuts, and if we don't get maybe even QE, can these markets sustain? Well, the S&P 500 is now trading at 22 times future earnings. And it's very important. That's future earnings, not current, that's future. So remember, the market always trades around 18 months off into the future. And you can see here that this is significant when you're looking at what we're kind of noticing here, which is that we're back to those really peak lofty areas where growth has to come in. And growth is expected, of course, to come in the form of AI. And I would say if I actually see where I think the growth is going to come from a lot, it's actually going to be from job sacking. So effectively, AI is replacing especially the basic jobs out there. And I look at AI as the replacement of basic human intelligence at this stage. So if you think of the industrial revolution of replacing muscles, then of course this is replacing a lot of office workers. And who's going to benefit from that first? Yeah, big tech. They're already doing it, but I think it's going to accelerate into 2026 and really force the Federal Reserve's hand to potentially cut to try to support the jobs market. And what could that do, guys? Well, could we be going back to inflation? Now, of course, this is only one data point. You always need to remember this is a scary looking chart. And boy, oh boy, does it look wild when you check it out. Have a look at this and just check out how close it is in terms of similarity. This is the 1970s period, which is well known for stagflation. What did well then? Housing did okay, but particularly gold, one of our favorites here, and silver as well. And also, I guess if Bitcoin was around, maybe Bitcoin would have done all right during that time as well. But you can see here that we have a market that is following a very similar trajectory. It is likely, at least in my opinion, that we've probably hit the bottom when it comes to inflation dropping. I think we're going to see a little bit of reinflation and stagnation in the inflation. The reason why is because we are now cutting rates, and the reason we're going to be cutting rates in the future is unemployment. So, of course, the Fed has a dual mandate, and the mandate will be keep the jobs and try to keep this market stabilized for now. Now, what could this lead into? Well, we already know that when we have a good May and a good June, and it looks like we're going to have a good June, then we tend to have a pretty good final 6 months of the year. According to Ryan Detrick, you can see here the data is pretty strong at almost 94% by the final 6 months, and that's a pretty big deal when you're taking a look at these markets. We also do know that Christmas in July is a well-known kind of read, and that is that if we get a sideways or down market in June, which is exactly what we did get. We didn't get down, but we did get a pit, so we got to pull back in time. Almost nothing happened until the end of the month. This is exactly where you usually see breakouts, and in this case, usually you continue to see some rallies, and then we go into further potentials for chopping in terms of this market. So it is pretty much following what you'd usually expect so far. And this is because if we go from 2009 to current data, we know that 94% of the time, not guaranteed, but of course, 94% of the time, the NASDAQ performs very well in the month of July. It's actually the best month for the NASDAQ of the year, if you're not aware. Bitcoin options. Now, we have already seen a lot of speculation about stable coins, about what we've just started to see now in the real estate market and, of course, crypto. But what we do know here is that Bitcoin options open interest is massive. And this is leading into, of course, some really interesting stuff in terms of huge speculation. If you haven't been looking at the derivatives market for crypto, it's now time that you have to do this, especially since the back end of 2024. And it's now becoming one of the most traded options in the world. So this is going to be one of those options that you are going to be able to see risk on, risk off with. And we will be tracking it here on the channel as much as we can moving forward whenever we see edge from it. Another thing to keep in mind is if we are going into that 70s style period, we've talked about this chart before, could we be seeing a massive catch-up silver trade? So you can see here that silver often does perform very well during these periods of time. And when gold's gone, silver generally is about to come with it. And that could be, what we've just seen in terms of the breakout. Obviously, we're looking for the next breakout. We've got the chart coming up a little bit later on. So history suggests that this year is going to be tough, and we already knew this. We knew this back in December of last year. The reason why? Because we had two back-to-back absolute best years, you could ever really hope for. And this year has been exactly what we'd expect. Chop up, chop down, maybe a little bit more selling than we thought because, of course, of the tariffs. But in general, a very, very strong market. And you can see here that it continues to kind of show as potential up, down, and all around for the rest of the year, with year 4 usually giving the better gains. So if we are going to follow the similar kind of situation to what we've seen in the past, then that would mean that it is going to be still a very volatile market moving into the back of the year. And I think that the big thing that's going to be volatile here is the choice of maybe getting rid of Jerome Powell earlier than later, and also what is going to happen with all the treasuries. We know there is a treasury cliff coming and a huge amount of small businesses also needing to get refinanced. So are they going to be lucky enough to get the finance? Is it going to cause problems? This is the big one that for a lot of people. Let's have a look at the S&P 500 and check it out. So we can see here that 6,100 level, which we know is a core wall, managed to hold the resistance for now. We have a gap here, and we also have a level that we do know was pretty heavily traded. We also know that the market has been rallying off a 20 moving average. So we've seen here a few 20 moving average hits. 1, 2, 3. We've got a higher high each time. So you can see here higher high, higher high, higher low, higher high, higher low. So if it's now made a higher high, if it comes back to the 20, you've got to think buyers are probably going to be there. And you can see that here when we're taking a look at this market. The couple of things that are worthwhile noting is if we take the low here on the futures to the high, and we kind of extrapolate, we're going to be sitting at around a 61.8 fib should the market come back down. Now, that's what we call a golden fib or a golden pocket if you use the Gann number as well. And basically what this shows is a very, very key zone for the most traded area. And really, this is going to be that zone that you want to be paying the most attention to. And yeah, I would say that it's a key level for whether the bulls or the bears end up winning out. At this stage, though, the bulls are in pretty much full control. The 6100 call wall is very important. Here are the updated options highs and lows. And speaking of options, everybody's stacking that level. So you can see here that if we do break through 6100, this zone is so heavily stacked. Take a look at the 27th, over 30 mil. So there is a huge amount of calls. This is a massive call wall. And it continues to be a massive call wall. It doesn't matter what expiration you're looking at. Huge amounts of transactions coming through at 6100. So with NVIDIA leading, it's a possible sign that semis are leading now to really break this level. And we will look at that soon. But basically, this is kind of what you've been looking for in terms of semis breaking out. Tesla, on the other hand, failed at 350. Where did it go? Like we said in the previous video, straight back to 320. Why did it hold that level? Put wall. So basically a lot of puts on that zone. We've seen a bounce off that area. And now the question is, can the bulls get reinvigorated to push it past 350? And if it does get through 350, we expect kind of a 380 based on current option scenarios. So with NVIDIA, it's finally done it. 154.30 on the close. That's a pretty big deal. I mean, this is the first time we've closed above 150 on NVIDIA. And it kind of points towards the possibility now of that kind of magical fib extension 175 zone. So could that happen? It's going to take time. It's not going to be like a few days or anything. But this kind of again signifies that now if we see sell-offs, that most likely institutions and funds and all these people are going to have to start buying into the markets. And what this is also going to open up is, have we seen too many people go euphoric? That is, are we now seeing too many calls coming through and not enough puts? So only about a week ago, we had a huge overwhelming level of puts, maybe 2 weeks ago now. Now we're starting to see a huge overwhelming level of calls, but it's not enough yet. Usually the calls sustain for a while, but what these can do is if they start hovering down at these levels and push through on the put-call ratio, it basically ends up leading into too many people are stacked in that location, and it's more profitable for the street, especially the options players, to sell the market back down. So we're certainly getting at the extreme level of calls, and we'll continue to track that together. What about yields? Well, they dropped off a cliff. US 2-year, US 10-year. Let's have a look at the US 30-year as well. Now, usually speaking, what you tend to see is you tend to see the short yields move, because that's, of course, what the Federal Reserve controls. And you tend to see kind of the longer yields usually not move as much, but all did fall off a cliff kind of over the last 24 hours. And this is helping to sustain the idea that, okay, if we're going to get these rate cuts, then that could be, of course, further stimulatory towards the markets. And yeah, there's going to be that really close thing, which is what is the Fed going to be doing and who indeed is going to be actually the chair of the Fed moving forward. What about bonds market? Bonds did not dislike this. You can see here bond spreads, options. We're actually seeing declines here. And what that basically is telling us is that risk is lessening. So according to the bonds market, which is probably smarter than most of us, they're not worried. And it's different between treasuries. Remember, this is corp bonds. This is what I consider the lifeblood of America. If this is worried and doing what it did last time, then of course you want to be a bit more bearish on markets. But when it switched, remember it switched here in the beginning of April towards the bull end again. That was a good sign that maybe we'd hit the low and the bottom. US dollar continues its trend down. And as we've suspected, although this is a very heavy oversold kind of market, that means that everyone's now on the short. At this stage, the technicals point towards a 96, 95, 50. There's no reason to say that's not going to happen, but we are, of course, looking for the ideas of potential price action towards the upside if it does occur. At this stage, absolutely it has not. Gold benefited a little bit from the dollar moving down. Nothing really much to report on gold there. And silver did a little bit better. Silver now pressing that 36.50 zone. And I like this area. If it breaks through the 36.50 zone, that could signify that silver's ready to go again. And do remember, we do prefer silver over gold at the moment because of its catch-up probability. So if you're not aware, silver often does catch up on gold over time. And that's, a pretty important statistic to be looking at. So you can see here, nice big wick rejections. Like to see it break through. Like anything in controls, there is a risk here, but certainly silver on the improve. Oil started to stabilize. No updates though. Still looking for structure, guys. We'll update when that happens. Still a very risky trade. And Tesla hit the 320. That was when it actually hit like 320 just a little bit. Yeah. So it was a very, very good level there for a bid to try to come back in. Wasn't super strong by the end of the day. So we'll see what ends up happening. But yeah, I can see why someone would try to buy this. 300 is the next zone underneath this if it's going to go to the next zone. And of course, buyers will be hoping for a 350 plus because a 350 plus close, that's going to signify the next zone. And that's around that 380 when it comes to these markets. The big story though was Nvidia. Look at that all-time high. And that just shows you that markets can keep squeezing with very minimal pullbacks. What do they say? Don't short a dull market. And unfortunately for some, if you don't do it with options, it can be quite risky because as you can see here, this is likely squeezing shorts that are non-optionable. And yeah, unfortunately for some, it's not going to be so good. But what we saw here was an overbought market. And then it just went, you know what? Stuff that, still going to go up after the pullback in time. And it's broken through 150 plus. So this is kind of pointing towards that possibility now of an extension 175. And there's going to be a few upgrades here. So yeah, I would say analysts are rising their targets. Here we go, just the latest one here. Analysts raised price target from 175 to $250. Let that sink in. They're mad, of course, but that's all right. Who cares? You know, that's the thing in the markets. The analyst updates it. They call all their clients, guys, our analyst says it's worth $300. It's 250. You know, that is a percentage increase. You got to buy in. You might not think that's how it works, but it is pretty much partially how it works in the industry. Semiconductors here, you could see a big breakout and a movement up. And semis, of course, also really already showing that they were strong throughout the previous session. Again, it shows you should look at the strong sections of the market and always consider that if semiconductors are improving, that it's usually a fairly bullish sign. You can see here semiconductors versus the S&P. It's a really big rally coming through here. Another big rally to talk of is if you were involved in coin. We don't often go too many single stocks here, but we had this one. This was a beautiful trade. Now, I'm not saying it can't continue. Of course, anything can happen, but take a look at this flag. And that is perfection in terms of the highs. You'll also notice it hit right bang on that 370. And I had this in our private community as well. We were talking about it. And that is just a beautiful break. Wednesday, just a week ago, you know, bang, okay, yes, ready to go. And then automatically here. And that's over a 1-to-1 trade with risk reward. Not bad. Of course, there are better out there, but as a raw percentage, how much is that as a raw percentage? That's a 22.5% move off the back of all this crypto stuff that's coming through, stable coins. And now, of course, let's lend to houses. What about the mid caps? Mid caps underperformed the SPY over the last 24 hours. So again, you're seeing really this being a quality move and a crap move. What I mean by that is it's quality in terms of the best stocks in the world. And then the crap is kind of like the meme, the retail stuff, the euphoria, and of course the businesses that make absolutely no money and are based on future gains somewhere, hopefully that they can become the next Tesla or something. So yeah, this is a very interesting market dynamic. It reminds me a lot of 2021. What market does it remind you guys of? Let me know down below. NASDAQ continues up, all-time high, now achieved an all-time high close. There's no real reason to say it's going to short just yet. There could be a flash sell. Anything can happen, but there's no reason to say that's happening just yet. And Ethereum getting close to that most traded zone, 2,500 coming in. And of course, Bitcoin moving ahead, 108 plus coming in. If that happens, you have to think Bitcoin is starting to move to the upside. This is most likely a short trap. And with the news, you know, about lending into mortgages and stuff, and also with the stable coin and maybe the adoption of Bitcoin being a legitimate currency in terms of the world's eyes, this is, you know, I think a pretty big deal. So, you know, 125, maybe just around the corner, bigger numbers, anything's possible. You know, do not discount the fact that Bitcoin can do crazy numbers because it can, and you've got to liken it as market capitalization. So how big is Bitcoin? How much is lost? And of course, then you compare to gold and you think about asset size. That's always a good way of kind of breaking it down. We'll do that soon together. In terms of news moving forward, the big one here is going to be core PCE, which is on Friday, and that is at 8:30 a.m. Do I think it's that big? Not really. This is all going to be just moving based on flows and options. And to summarize today, guys, I guess the big news here, and I would not understate it, is the crypto being used for buying houses. I think that is a huge deal in the future. And when you kind of bring MSTR into the case and you think about that as well, I think crypto volatility is going to be the story that we look back on in the future and say, whoa, what was going on there? That being said, for now, it looks like everybody is absolutely euphoric. We're seeing very similar runs to 2021. And that can, of course, get quite ballistic before things end up going bad. And we're seeing, more importantly, semiconductors leading once again, which is, of course, a big breakout. When it comes to pullbacks, they can happen at any time, so you've got to expect that that is possible. But at this stage, it looks like institutions and hedge funds, at least based on the data that we're seeing, are still behind. And they may need to continue to be in, similar to, again, a 2020 scenario. So what happened there? We ended up getting a decent dip, but they did buy it up. So shallow dips generally looking a bit more bullish at this case. All right, guys, thank you so much. Hope you're doing well. We'll see you in the next one. Remember to subscribe and smash that like button and alert button as well to keep updated.